Welcome guys, welcome back to another streams. I'm just gonna send my Zoom link. Welcome back everyone. You guys can all hear me, right? Well, we got 14 people here already. I think Wix isn't streaming tonight, which is probably why there's more people looking to get a better understanding of the charts, so that when they start trading it, they could become they could be coming out a little bit more profitable. But yeah, I haven't looked at the charts for a couple hours. I didn't trade FOMC afterwards, so I'm not in the trade Don is in. But we can analyze it, and we'll see what's going on there. Welcome to everybody on the Zoom. Welcome. Yeah, we're just going to be starting in about 1 minute here, guys. I mean, it's not that late for any country, right? Like London is like 10:30. Oh, do I have to move my streams forward? I don't think I'll keep it at this time. I think the US is currently like what? You're like 5 hours behind us, right? Yeah, nobody's in like, midnight sort of situation at the moment, so you can still watch it, even though there's not going to do too much currently. But yeah, cool guys. So welcome back to the streams. Oh, they're now 3:30. Jesus God. Anyways, guys, I think we mentioned yesterday, right? Oh, PM. Okay, safe. Yeah, we mentioned yesterday that price is gonna tap 1971, right? That's basically the one takeaway that you should have had from the entire stream yesterday. Why? Because just take a look on the daily, right? Last time we closed respecting this area here. We're in this sort of range, right? We tapped 81. We didn't push up, right? So we're looking to grab more liquidity down to these areas, right? Look at these. Look at these areas. That's why we said 1970, 1971. That's exactly where we tapped, right? We even got that massive rejection there. So currently, how far are we from that position? We are about 130 pips away, right? And then just to recap on kind of positions, right? I mentioned that I'm bearish until we tap 1971, right? So even this push up here, I think we were discussing with Tom yesterday, right? You're looking at all of this and you're still understanding that you're respecting all of this range here. You're respecting this range. You came down and suddenly you popped up, right? You were looking to come down short-term bearish, suddenly get a top wick after you're respecting 1986, any given point, right? You had a bearish candle that kind of broke all these lows. So if you go on the 15, it'll look clearer, right? 15 is breaking the lows, respected, right? But once you came up, no top wick and no bottom wick for these candles, this could have been a massive liquidity grab for price to continue bearish movement, right? Which is why I got into a trade at 1982 sorts of areas. And I closed out around here. My next support, right, which is around 1978, which was around like 40 something pips. I think I closed at like 42. But It tapped overall TP because we're expecting 1971, right? And for those who were catching the sells to come down, yeah, congratulations. But you also, once you went stop loss to BE, you never tapped your BE level, right? You just straight down. So even if you just ignored it and you kind of just left it, right, you'd be good. So let's do some breakdowns now. Cool. Monthly has 1 day of info and data, but understanding that the monthly has not closed above. Price can do anything. All right, you're still in the range. You haven't broken out of the range for the monthly. So the monthly is not too clear, but we can have a look at the weekly, right? The weekly is currently it's struggling to flip, right? And in that case, we could be looking at it mirroring sorts of these sorts of fake outs, right? A bullish closing back into range, but then back into the top range, and then just driving up to retest 2070 sorts of areas. That'd be pretty clean. So if we do get that, that'd be good. Let me just turn the music down a little bit. I'm worried you guys can't hear shit. But on the weekly, right, I would say you've closed above this area, which is 1993, or like towards 1990 sorts of areas, but you also closed respecting this, right? So understanding that every time you do break above this area, you then fill up to 2065. So that is the next range I'm looking to fill once we get a breakout. But I'm understanding that price is currently in this range. We don't have enough liquidity for us to break out yet, right? So like, is this enough liquidity? 1970, 1971? Maybe. So if that is enough liquidity, we'll see a breakout in the next couple of days, next couple of weeks, right? And as that happens, we can take the positions going up, because we're following general bullishness again, right? I think this is quite a large pullback that we're having currently on this weekly. And I think today is Wednesday, so we have 2 days left, right? So is the weekly going to flip in time? It can, right? Obviously, but we don't know, right? You're about how many pips away? About like 260 pips, which is not that far, right? If you have some news, if you have like price grabbing liquidity and then making a drive up, any given point, right? You could be completely like bullish above within this week, and then your next week's just going to start pushing towards 2065. But let's have a look at the daily to see where we've closed. Very important closure today. So we have 2 levels, right? 2009 is a weekly and daily level that I'm pretty happy with. There's another level at 1981, right? So we mentioned that we were going to grab liquidity towards these sorts of areas, right? Then now we are closing respecting 1981, right? Now that we've respected 1981, cool. Like, we're still in the range, and this could be liquidity for us to retest the top of the ranges, right? Similar to this, we tested this area, we then filled the range, didn't break above, right? But then we just started ranging. So you get, range fills and just up and down in this kind of range quite often. So I wouldn't be surprised if you start testing 2009 again, but doesn't mean you're going to just go into a buy immediately, right? If you got into the buys towards 1971, then yeah, that's fine. You'd probably have closed full now. Understanding that your daily has already closed, so if it's going to generate a bottom wick, you don't know if the bottom wick is going to break this bottom wick, because your 30-minute, your hourly is generally relatively bearish still, right? You're creating lower lows, right? So as that's happening, I'm understanding that the daily is closing like this, so at any given time it can fill the range, but short term wise, I'm still bearish, right? So it's a little bit of mixed bias today, right? I'm bearish, but I'm understanding that we've closed bearish respecting. So at any given time, we can start going up. Let's look at the 4 hour. 4 hour is going to give us a little bit more information. Actually, I've been liking just going to the hourly to find the levels. They seem to be slightly clearer to me on the hourly. Like, for example, this, like, I'm pretty happy with this as a level, right? And then your next level above that is probably somewhere around here. And then your next level below is probably somewhere like, I'd like to put it here. Might be slightly above, like here. Yeah, I'm pretty happy with that. And then you have like, smaller ranges in between that you kind of touch. But cool. Yeah, and you can say you have like a general kind of area here, right? 1971 sorts of areas, 1970. Cool. So if this is my general range, areas, right? We could be looking for potential positions once we break out of what this kind of messy area that we are currently in, right? So we've grabbed liquidity, we've closed respecting, we've now pushed to the top of this range. Is this enough liquidity for us to break this and then break 1987 to go up? I don't know, right? Because I'm understanding that currently the daily has grabbed liquidity here. We've closed respecting, so any given point is going to fill the next range. But just looking at price currently, we've created a lower low. So is it going to even break up? I don't know, right? You could break up and then get a fake out to come down, which is why I'm wary about 1983. Above 1992, 1991, I am off the rip. Why? Because you've then filled this entire wick, firstly. I want to move this slightly, like this. So, so above 1970, 1987, right, you do have kind of a little bit of break of structure, right? You've created a lower low, but now you're closing above most recent. So that would indicate that you are, this was a liquidity grab, but I'm expecting this liquidity grab was only within the next range on the hourly. I'm expecting a steeper liquidity grab, maybe down towards these sorts of areas, towards like 1965 or maybe like even lower, right? For price to be able to retest all of these highs, right? And you can get liquidity in a couple different ways. I would say number one is if it just grabs liquidity very, very far down, starts closing above, and then just starts driving. Or you can get the breakout, and then it's starting to grab liquidity from the ranges below, and then starting to go up again, right? There's multiple ways that can happen, but I am off the rip above 1992, understanding that once you break this, you're breaking wick structure, you're breaking closure structure, right? Obviously, I'm going to need a closure above here, which is why, it's more likely that you'll get a closure above 87, and then it's just going to come up slowly. Above 92, it's probably either off the rip, if the structure for like in between 1983 and 1992 is something like this, right, where it's just doing this, I'm not going to be looking for this off the rip anymore. I'll be looking for a breakout bottom wick and then flip to go up, right? Either that, or if it does this and then comes up, and then if it just suddenly does something like this, I'll be looking for the flip to go up. I'm not taking the wick entries because at any given point, this could continue bearish motion, right? So that's my buys, right? Understanding that currently it's either off the rip or you still need a bottom wick, but that depends on what gets formed in this sort of area. As price has now filled this range, there is a high chance you will get a fake out, which is this, right? I don't know if it's going to be a fake out above here or likely above 1983, and then you get a closure below. You might fill down to at least like these sorts of areas here towards 1978. And then once you get that, this could be liquidity to go up, or this small fake out was enough for us to start coming down. Don't know, right? But that's why I'm not trading this range. This range we've been tapping multiple times, top and bottom of the range so many times. I don't want to trade it, right? Because at any given point, you'll get a breakout and you won't retest these areas, right? You've been ranging too hard, like, since a week ago, or like a couple weeks ago, like from mid-October till now, you've been ranging in this area. So I don't really want to touch it for now. I want to get a breakout potentially above here. I'd like to touch these areas, right, above 92. Or if you do get sells, right, I'm happy to look for sells below, I would say, I'd like it almost, maybe like below these areas almost. But I'm understanding this wick was clean traffic down. So where can we get entries? Might get some entries below here if this respected 67. Okay, that's not too bad. What happened on the 5? On the 5 you had this. Yeah, I'm pretty happy with price. Once you break below this, I'm pretty happy, right? Even here you broke below and this is at least 10 pips, I'm pretty sure. This, yeah, 13, right? Your next resistance is around 10. So I'm happy with 1967 as the break below sells. Understanding that price, right? currently grabbed this liquidity, popped down to these sorts of areas, right? But you didn't break out of this range on a closure. So this was not enough liquidity for us to break out potentially. So if you do then get a fake out to come back into 1983 after closing above, you could have enough liquidity for a breakout here. So if you get the fake out here and then you get a breakout below here, I might take the breakout below 1974, right? But if you don't and you just start ranging like this, and then you start trickling down, I won't get a position here likely unless you create a very steep top wick and then a flip, right? If that happens, cool, maybe we'll get in. So it's very dependent. It probably needs to break all these highs to grab liquidity in this sort of area, right? But I'll probably be looking for positions like this to come down below 67. Because you're also understanding, right? You grab liquidity at 92, but that wasn't enough for you to break in a closure below 74, right? So therefore, liquidity being grabbed in this area is no longer enough for us. I now need more liquidity to start retracing down to, you know, the kind of 1967 areas, because at any given point this could have been higher time frame liquidity to go up, right? So that's why my sells below are slightly far, and then my buys above are very, very high up as well. Like, they're not in this range because I don't like this range currently. I like this range when we were like potentially somewhere around these areas, right? Here was fine, and you could have taken a closure above this, and you could have hit this, you know, as your next range up, mapping this, right? But then once you start coming down, you probably could have taken some sells, coming back down from here to fill this range. But now that it's done it so many times, like, you'll only range so much in one area, like for a couple days, weeks, or whatever. But once you see all of this happening, you're expecting either you're going up or you're going down, right? So why are you still trading the top and bottom of this range? That's the main thing I'm worried about. Yeah, and I hope that makes sense to you guys as well. Let's look on the smaller time frames. Yeah, I mean, like, look at all of this, right? This is just starting to get a little bit messy. Like, you do have 30-minute ranges and whatever. You could have got like a celery to come down. Cool, right? But at the same time, like, this range has been used so much. Like, all of this, like, look at these wicks, right? Are you rejecting to come down, or are you now like, this now a fake up to go up, a fake out to go up? I don't understand what this is, and I'm not trying to like just, you know, really in depthly understand exactly what happened here so I can take a trade in this range, because if this doesn't look clear to me, I'm just gonna ignore it, right? What looks slightly clearer to me is that we've tapped 71, so at any given point we can start breaking up and retesting the highs. That's the main thing I'm grabbing from this. So if you start getting closures above here, I'm expecting it to continue pushing up because you've grabbed the liquidity. But above 92, I probably, you know, if it's trickling up, I'll probably need some more liquidity before it's able to pop. And like, I know we currently don't have much volume, like indicated by, you know, smaller candles, but you still can get that drive during Asian. So yeah. Okay, let's talk about one other thing actually. So now that daily has tapped these areas, right? So what is the higher time frame moves? Because we've tapped higher time frame liquidity areas, right? So I would say there's two things that can happen. Oh, sorry, three things, right? Your classic three things. Either price is going to continue to range as it did here, or number two, it's going to break out, right? It's now respecting, so you could get a breakout, and you could start retesting the highs already because you've already tapped into this kind of area, right? Cool. If that's happening, sure, we'll stack buys above 2009 to start going up, right? Or you can actually start breaking below. In terms of probability of what's going to happen, I would say all of them are currently equal, right? Why do I say that? Because for the buys above, right, I'd like for us to, you know, start retesting these sorts of areas before I'm more sure that we're actually going to break above. Currently, structure is very bearish, right? What's to say price is not just going to reject here, close below 1953 and then start rejecting to come down, right? I don't know that, right? If you're just going to continue to range, then you're just, you know, mirroring all of this stuff here. All right. So if that's the case, very difficult for us to trade because I just mentioned, right? You've ranged in this place for, you know, the last couple of days and weeks. So if you're continuing to range there, it might be difficult for you to take buys and sells in this range after you've already grabbed this daily liquidity, right? After grabbing higher time frame liquidity, you're going to make higher time frame moves, and you don't want to be caught in a 30-minute, hourly, or even like a 5-minute, 15-minute play when the daily is pushing. All right, when it's pushing harder than a fucking pregnant lady, you don't want to be sitting there in drawdown thinking about, oh, is it going to come back, and then taking pineapples just so you can get out at break even, but it's not coming back, right? I don't want to be in that situation because I've been there too many times. As such, I'm looking for buys, and sells outside of those ranges, right? And obviously, if this starts breaking below this wick, it's pretty much confirming that we are going to fill the next range down, right? If you break below this area, you're looking at this breakout to start coming down to retest these sorts of lows at 53, 54 sorts of areas. So if that happens, great. Then we can trade this range, right? But if it starts breaking above here, then great. We can trade the range going up to around, 2022, 2030 sorts of areas. And that's clean as well. Up or down is clean, but the inside of this range is not as clean currently. Yeah, so I would just be, aware of that. So if you are taking positions within this range, either have relatively strong confirmations that your 30-minute, 15-minute, or whatever time frame is aligning relatively strongly. You're looking for like celeries or breakouts or whatever, and then you're just looking for simple range fills, right? For example, you get a closure above here, cool, range fill up to here. If it's already filled the range, then you can't get into a position, even if it comes back down. Because it's filled the range, there's no need for price to fill the range again, right? So it's a pretty simple analysis today, I would say. I don't have any higher time frame, moves. Obviously, if we do now fill the next range, you're going to tap into these sorts of areas, right? So I'm expecting price to tap into 2005 to 2009, this range once again. So as that happens, cool, we'll be looking for the buys to go up to these sorts of areas above 92 or above, 97 sorts of areas anyways. But I'm not going to predict it. I'm not going to say, yeah, price is definitely going to tap 2005, 2009 because you're so bearish at the moment. But previously, I was able to tell you guys that you're high chance going to tap 1970. Why? Because you've closed respecting. You don't have enough liquidity to push up, right? Indicated by your closure respecting this range. Therefore, if it wants to continue driving up, it needs to grab liquidity. And if you are bearish, you will tap 1980 anyways, 1971 anyways, right? So it makes a lot of sense that the higher probability of price is that it's going to come and tap those areas, right? So it makes a lot of sense. And that's it. Guys, the analysis today is very simple. I'd like to talk about Don's trade, but I don't know where it is. So I'm going to, free up some boys on the Zooms, and then you guys can let me know if you guys are in the trade or what's actually going on there, because I was out. I was playing some badminton.
Yo, I'm not in the trade.
Sup, yo.
It's I think he took a sell around 76.
76. Do you know when he took the sell?
It was right after OMC. It was like 2 o'clock, 2:30.
Can anybody tell me the candle? Because I don't have.
I know, I remember it. You can just show me this.
Do you know where it is?
Can you hear me?
Yeah, I can hear you. Just let me know where it is.
It was like, wait.
1976 is like these areas, right? Did he look for this sell here?
No. Further. It's like.
Oh, he probably looked for.
Can you go on the 30 minute?
It's probably this bullish candle, right? Because you had no bottom wick, you gotta look to fill that.
Yeah. I think he was.
7 p.m. your time.
Yeah, cool.
I think he was going for the 1 hour close below the range.
Yeah. Okay.
He thought it will fill the range,
Cool. I'm pretty sure he got in around here then. What's a stop loss? Well, let me think about what a stop loss would be. Stop loss probably above all of this, right?
Yeah, above the range. Imagine it.
Yeah, makes sense. And his TP's probably like down to here, but he's probably looking to get out break even, I'd imagine.
Exactly.
Yeah. So I mean, you guys understand why, right? Like, did you guys take this trade? Number one.
I'm in the trade.
You're in the trade. Okay. So did it align with what you were looking for?
Me Me personally, yeah, I was trying to get in sales to like 67.
Okay, okay, yeah, that's fine. That like as long as you understand that 67 is also likely to tap, then yeah, that's fine.
Yeah.
Yeah, yeah. Who didn't
Can I
get into the
ask
trade?
why the level of 67? Like, because I've been trying to like get better at my. Every day when I watch you, I see you go back and like you mark up stuff that goes from previous history.
Yeah.
But like, how do you know when to pick the history? Like, when do you
Yeah, yeah,
when do you know it's like
yeah. So, for example, right? Let me just clear this really quickly. So, understanding that price most recently, right? This daily closed respecting here. I'm just looking. Okay, cool. First step is when was the last time price closed respecting 2006? Looking at these, right? These sorts of areas, all of this. Currently, I'm looking at all of this, right? And then potentially even like something around here, but this you kind of respect and you start going up, so less interested in that. Generally, all of this, you tapped, respected, tapped, respected, rejected, 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 all of this I'm very interested in, right? Then, after that, I'm understanding we're bullish, right? So I'm just looking for where did price tap before we were able to push above 2006, and that's a closure above, right? So then I'm interested in these, right? So these you didn't get a closure below, I didn't get a closure above, but you tapped towards this sort of area, right? To get liquidity before you were able to push above. And this is on this kind of bullish motion here. We were pretty much mirroring all of this bullish motion up until most recent, right? And then also, once you came back into this range, you grab liquidity towards this box before you were able to push up, right? Why am I more interested in this compared to this currently? Because number one, we were in this range as well previously. I would say if this was a fake out and you came back down, right? This was that range. So 1954, we analyzed that it's likely to tap. Why? Because it's towards the bottom of these ranges, right? This wick here, these wicks here. So 1954 is likely to tap. And then at that point, I would say you have enough momentum and like liquidity if you want to close above here, right? Because you've tapped into these areas previously tapped as well. If you aren't closing above, maybe you needed liquidity down at 34, 36, right? But to come down there, right, I would expect us to be very, very bearish at that point, because you formed structure, and then as you break that structure, you're going to come down. But like in this case, you haven't formed that structure yet, right? On your daily candle, you've had like 4 candles and you found support here at 1940, but you don't have any ranges in between, so you don't have the structure that we have currently, right? With current structure, we closed bearish and then bearish again and then another bearish candle, all respecting the next support, which is 1981, 1982. So every single time we close respecting all of this, we come down to these sorts of areas to grab liquidity before you're able to push back up. That's why I was looking to see 1970, 1971 to get tapped. And once that tapped, now I'm understanding that price on the daily time frame has enough liquidity if it wants to drive up. Does that make sense?
Yes, I actually see it way clearer now.
Yeah, you see it very clearly, right? So because you've tapped here now, it's now price's own game. Like I'm not predicting anything because you've already tapped what I've predicted, right? If you want to drive up, it can, right? Unless you like, for example, like for the previous daily, you haven't come down to these sorts of areas, but you're closing respecting. What I would say for yesterday, at least, right? Before I predicted this, I would say, yeah, you're just in this range. You're just in this range. If you want to come down, cool. This could be liquidity to go up, or this could be, a breakout liquidity and then starting to come down. Those were your 2 options. But regardless of what those options are, it's a very high chance you are going to tap into these areas, right? And if you are going to see a rejection, then cool, you'll see a rejection. But it's a level that price will make a decision at, and that's it. Does that make sense, Maui?
Yeah, it does. It really does. But okay, so right now I see that we're on the daily.
Yeah.
Could you like how you're doing it right now? Could you break it down to like the smaller time frames where you would enter?
Yeah,
like,
yeah.
Just somebody.
So let me actually go back to. I don't want to lose my valuable. It's not that valuable. I can do it again. But yeah, okay. So so for example, we had that daily breakdown, right? So now let's go to the 4 hour. 4-hour, most recent 4-hour structure, what is it looking like? We had a range 1. Like, just look very big picture, right? Then remove again, you have range 1. Or I'm not going to say range 1 or whatever, just range. You have range there, you have a range here, towards around these areas, and you have another range here. Alright? Let's just say that's your range on the 4-hour, right? Obviously you have some smaller ranges in between, but I could care less at this given point in time. Let's do 3 lines. Let's do 4 lines actually. Oops, I want to draw a line, please. Alright, so now I have these 4 lines. Now, I'm looking at where I was interested on the daily. I'm looking at what happened, right? I'm currently in this range indicated by this green line here. I'm in this range. What's happening, right? I've tapped into 1971, 1970, like these sorts of areas, right? So last time we tapped into here, rejected, you got a push going up, right? A very aggressive push, right? This is, like if we go to the hourly, you'll see how aggressive this was. Like you had a fake out. Look at how aggressive this was, right? You had no top wick, basically no bottom wick, straight drive up, right? So this in the 4-hour is a wick, right? So in that case, right, price tapped into these areas, then it started rejecting to go up. So now that we're in this range, what does that indicate? Indicates that this could be liquidity for us to start driving up. So if you start getting closures above 92, which is I think where we had our closures above, I'm looking for buys. Does it make sense on the 4-hour now?
Yeah, so
yeah.
You said on the closure, right? You would be looking, so like the wick wouldn't determine anything to you at that point?
No, I don't look for wicks because at this point, right, currently, price above 92, sure, it looks clean, right? But we're bearish. We're bearish. Like, look at this, right? We've come down. We're very bearish, right? You even grab liquidity to break these lows. So what's to say that once you do get a closure above 92, just not a closure below, like just a wick, right? Let's say you get a wick above, but like let's say you're ranging like here, respecting all of this here, right? This level here, and then you just get a wick above. I'm not going to take a buy because you're respecting all of this structure. So this is high chance that this is a liquidity grab, either a liquidity grab or it's going to come back down to retrace to grab liquidity to go up. But that's the only moves it can do. So that's why I'm looking for a closure above a bottom wick if it trickles up to start going up. If it just fills, like for example, because you have smaller ranges to go up, right? If you just close above 1987, it just rips up, right? And it's already grabbed liquidity, like in these sorts of areas. Like for example, you get a closure above here, grabs liquidity, and then you get a closure above here immediately. I'm looking for this to just go straight up. And do you understand why?
Yes.
Yeah.
Yes, because they already grabbed the liquidity.
Exactly.
Okay, I'm seeing it now.
Yeah. It's clear, right? It's slightly clearer. Just every day, just come to the charts and just watch this shit happen, and it's fun until it gets boring, and then you're just looking at the same shit every day.
Yeah, I kind of got cocky. I'm not even gonna lie. It was fun until today.
Yeah, no, but that's what happens. Like it happened to me most recently as well. Like it would just be like, oh yeah, I'm looking at it, I see it every single day, but I can still be wrong, right? But then you need to be able to distinguish when you are wrong and when the markets are actually just against you. So we have a win rate potentially of like 70 something 80%, right? That means that even if you get into a trade and it goes against you, it could be one of two things. Either it's a 30% that it wasn't going to play out, right? Market's fucking you over, or your analysis was wrong, right? And if you come to the charts every single day and you're understanding that your analysis usually plays out, then there's a higher chance that trade that didn't work out, if it followed your plan exactly, was actually a fine trade. So you don't, just basically don't dwell on that trade itself. Look for your next trade, your next setup and everything, because that's still very important. Oh yeah, I wanted to discuss this as well. So Don's trade, right? Let's break this down. The daily close respecting, cool. I'm expecting a daily bottom wick, right? Look at all of these bottom wicks down here, right? All of these tapped into basically the entry point where Don was at. So I'm pretty sure you'll be fine. It's just, are you going to hit stop loss before you, I don't know how far this daily is going to drive up, if it's going to drive up all the way to 2005, 2009, before it comes down to create that bottom wick for the next couple of days, because if you're in this range, right, your next move after you closed here, you grab liquidity, is to come up to the range, right? But on the lower time frame, what might happen is you're gonna do this closure, right, and then you come back down, and then you then get a closure above, and you get something like this, right? So you could get exit your kind of trade around here. But let's break this down on all time frames so you guys kind of have some more confidence, right? 4 hour, what is it looking like? Your previous 4 hour close respecting 1983. Cool. What does that indicate, right? It indicates that there's a high chance you're still respecting this range, which means that on the 4 hour chart, there's a high chance you're going to come down to the bottom of the range, which is 1974. Right? If it's not 1974, it's going to be around 1976. Right? Looking at these wicks here, looking at these closures here, looking at this wick here, it's probably going to be closer to 1976. Right? So if you do, cool. Probably look to exit break even around there. Right? Let's look at the hourly, right? Your hourly got a closure. Is it above? This is this hour. Like, this is why I don't like this range anymore. It's just so unclear where you're actually going. Like, is this the top or your bottom of the range? But you have some wicks here. I'm gonna say it's difficult. This I'm gonna say it's around here. I like this slightly more. But then you also have this. I guess this was a fake out to come down. But your next range up is probably towards these sorts of areas, right? So expect drawdown to at least 1985 if you're still in the trade, right? Because you've now broken above on the hourly, so you're going to fill the range. Either you're going to fill up to 85. I'm pretty sure you're going to fill up to 85. Are you going to fill up at 87? I don't know. But you're likely going to get some sort of rejection in line with the 4 hour as this starts coming down, right? Because you are still very bearish, right? Your wick broke all of these. Your 4 hour didn't close below, but any given point, you can come back down and fill the range. So your hourly, that's the breakdown for the hourly. Your 30 closed above as well. If you get a breakout, a fake out to come back down in this next 30 minutes, then there's a high chance you might look to see the range fill down to these sorts of areas on the 30. Whereabouts is that? Like at least 1980. And if you get a breakout below there, you'll likely see it tap down to 1977 again. So I would say generally, like, there's a high chance that price will continue to put you in drawdown for the near future. But there's like the 4 hours aligned with, bearish structure. Even though you didn't get a bearish closure below this, right? You still are looking to fill the ranges coming down. Hourly is pretty good as well. You closed below, right? Even though you're respecting, you closed below, indicating you are still very bearish. But what you need essentially is a strong higher time frame closure below 1983 again. Ideally below all of this noise, which is around 1980. Once you get that, you're pretty much good to start coming down. But I wouldn't hold. And why I wouldn't hold is because of the entire analysis that I just broke down. Like, you tap 1971 on the daily time frame. I'm very bullish. Once again, even though you close bearish here, I'm actually I'm more bullish than I am bearish. So yeah.
Would you look for pineapple still at like 87?
No, I'm not looking. Well, I'm not in the trade, but I think if you were to look for pineapples, this 4 hour closure is not bad, right? But your next pineapple is probably like towards these sorts of areas, like 1990. I would say like you would want it, like, because I'm expecting it to tap 1987, right?
Yeah.
But if it's going to tap 87 and then it starts like breaking down, cool. I'm not going to be looking for the pineapples there. For pineapples, I'm going to be looking for like a strong rejection area, which is like towards these sorts of areas. Like, look at this, right? These wicks here, right? These strong rejection areas where once you tap, you get a rejection that comes down to these sorts of areas for how many pips this is? Like 50 pips. And you can probably exit if it's like towards these areas, like 84. How many pips is 84? Like, then you're minus 30 pips, but then you're expecting probably the 4 hour to flip and start coming down. Like, yeah, I would say your earliest pineapple is probably up here at 1989. I don't know where Don has his pineapples, but
Okay.
yeah, just
he has it at,
yeah.
Let's see. At 88, 86 or 88 is what he said.
I think 86 is a little bit risky, but because understanding that, look at this, right? Once you broke above, Like, unless you're respecting, if you continue to respect 83, cool, I can look for 686 as a pineapple. But you didn't, right? You broke above. You broke above, you're gonna fill to 85, and if you've tapped 86, right? Once you break above, you filled here, you filled here, you filled all of these times as well, right? So I'm expecting once you do break above 85 to get to 86, you're gonna fill up to 87, right?
Yeah.
And then if you respect, and then if you come back down and you're respecting, you know, these sorts of areas, you might come back down to these areas, and I'd probably exit break even, or like, you know, small loss. But if you haven't, and then you're looking for, you know, pineapple just to kind of minimize your loss, your next highest opportunity is probably around 89.
Okay.
But once you do, if you get a closure on the hourly above 87, I'd be worried, right? Because then you're breaking structure.
Yeah.
You know how we mentioned yesterday, there's no reason for price to come down, break the highs, break the lows, break the highs, break the lows, and then break the highs, right? It doesn't usually do that. So in this case, you haven't broken the highs, right? But you've created a new slightly higher high, I guess. So if you do break that high, there's a high chance you're now bullish to come up and fill this range.
Yeah.
Yeah.
Hey,
Cool.
Elvis, do you ever use the Fibonacci retracement?
Nope.
Just like wondering. You said no.
I have
So
never
you don't use
touched
nothing
those
on
tools.
price action?
I've never touched any lines or, like, you know, I don't even know what you call those, because that's how unfamiliar I am with those things. But I just don't. Like, not because like they're not useful to certain people. I know there's a bunch of traders out there who actually use all of those things and are very profitable, right? So no disrespect to anybody who uses that, but I personally think it's just a bit of a distraction, and like, what my aim was to kind of understand the very, very fundamentals of price. Like, if I'm able to read price to a degree where I can have similar concepts to those who are actually trading profitable and using those kind of Fibonacci or whatever it is, then that means my understanding of price action is quite strong, right? And at that point, I don't even need those anymore. I can just read price.
No, I feel you. Because sometimes I use the Fibonacci retracement, and like everything you mark up literally lines up with the Fibonacci. So I'm like, damn, you're great.
Yeah, but it's like if for like somebody, like, for example, if I looked at Fibonacci earlier on in my life, right, I'd be like, okay, so what are these levels? Like, why is it these specific levels on the Fibonacci? I don't even know how to use it, but like, I would want somebody to explain to me why those levels exist on the Fibonacci. And if you can explain it, then yeah, cool. Then it's probably for you.
Yeah, yeah, I feel you.
Yeah.
I just recently started using I've been watching like Anthony's World and Q Banks and stuff like that.
Yeah, yeah.
They use it like here and there, but it's like it's basically how you do your history. It's just like a harmonic scanner, but like on the Fibonacci, it tells you like the latest retracement or like the latest support and demand.
Yeah, I see what you mean.
It up on levels. Yeah. But I like the way you do it because it's like I'm actually seeing it instead of using the tool. I'd rather use like my mental, like
Yeah.
my eye.
Because price will show you a lot, especially with something that's so technical like gold. Like, it will tell you a lot of information just based on candle closures, wicks, and everything. So yeah, that's just kind of my way of understanding price. But obviously, like, if Fib is useful for you, like, because there is also like an element of like saving time. Like, Fib, could save you like another like 20 minutes of analysis every single time when you're in a trade or whatever, right? And if just as long as you understand what those levels are and you can reproduce it without the Fib, then yeah, then it's completely fine to use it.
I don't know why, but recently I felt like when I first started, because like my history with Forex, I originally started with like 2 years ago. I got introduced with IML Academy.
Okay.
And I was recruiting a lot of people. Like, I was just recruiting. But then I realized I'm recruiting people I don't even know how to trade. So I felt bad. I left the group.
I see what you mean. Yeah.
But now, fast forward to, like, recently, I'm just not trying to, like, work a 9 to 5 no more. So I got back into it. And, like, I was doing good on the demo. Like, I was making, like, 5-6K a day.
Yeah.
But when I open it live, I don't know what it is. I literally cannot execute trades.
I think it's, yeah.
I just know how to
I
get
think there's a
past it.
whole element of psychology on this. Like trading demo money versus live money, there's always going to be a difference, right? And it's about how attuned you are internally with your own trading and your own personality and understanding what money means to you. Because, for example, if you've quit your 9 to 5 and you started trading full time, right? That means whatever income you get on the charts is your income. Whatever your P&L on the charts is your actual P&L, right? And at that point, there's a lot more pressure to earn money. So, like, I think that's the big difference between, like, for example, just the way you said things, right? Like, just now, you just mentioned, yeah, so you made 5K, you were making 5K, 6K on a demo, right? That's a monetary value. If you were talking in pips, right, it would make a lot more sense that you're trying to win trades instead of make money.
Yeah.
Yeah. And obviously it's not a
Yeah.
diss to you. Like that, I had that moment as well. Like I was 0.7% away from my phase one, and then I came all the way back down to 0%, right? Just because like I understood, oh shit, like that's like $700, man. Like if I just traded a little bit, I could have gotten that, and then I lost a lot.
Man, I
So
was
it's
so
cycles.
close.
It cycles. That's why I'm not streaming with like actual signals yet, because I want to make sure that I'm ready, and everybody who's following my strategy or like DonVo strategy plus a little bit of my influence understands why they're trading it, and then I have like a good win rate track record and everything. But that will also come within DVS, and currently we have everybody aligned for Janez for London, Wix for Asian, and Don for New York, anyways. So, but yeah. I would say don't worry too much about it, honestly.
So what you think I should be doing, like on? Because I understand, like like I know it's about the money and stuff. Like mentally, I already understand that. To me, it's like the whole lifestyle switch up. Like this is actually my first job. I've never worked a job before.
Yeah.
And just understanding how like the whole working economy works, I just hate it, bro. I don't even
Yeah.
understand. That's just it's not fit for me, you know. Like coming from what I used to do to this, it's like damn, I can't do that. But how do I switch my mentality to where like even if I am worried about pips, like like let's say I want to catch 10 pips or something,
Yeah.
and then sometimes it ends up being a runner, and then I put my stop loss and break even or like in profit. I kind of like get mad when it comes back down and hits like like a lower, because I'm like damn, I should have just grabbed it when I was all the way through, or
Yeah. I see what you mean.
past like I don't
Yeah.
get past that.
Yeah, so there's no one easy answer to that, right? Like there's like I think we talked about this multiple times in like a very early stream, like early October, about like kind of the stages of a trader. Like there's a whole stage which is where you're trying to see if you're actually profitable. Like you understand a bit of concepts, right? You understand that your analysis sometimes makes sense. Sometimes you still lose, right? Obviously, because you're still like a relatively new trader. You're starting to understand concepts, trying to use those concepts. But because we don't have as much experience on the charts compared to like Don or like other traders, we don't actually know if we're fully profitable yet. And that's where it's difficult to kind of like evaluate, oh, do I test profitability, or like do I continue to work on the skill? Because you can continue to work on the skill and test profitability, but that that creates a risk of you losing money and then thinking that, oh, actually I don't know anything. But in that case, like you actually have learned a lot. But it just so happens that you've put in some like losing trades or whatever, but your analysis might still be playing out, right? So I would say, like, if you weren't in like a full-time trading kind of situation, I'd say it'd be slightly better, because now you have a little bit of pressure to make money. But like what I did to kind of just fast track learning the skill was, I just opened a very very small account, like $100, and I traded 0.01 until I made sure that, like, okay, I understand everything I'm seeing on those charts make a lot of sense. All the analysis that I'm doing is like 80% win rate, and then at that point I opened a funded, right? Because at that point I'm understanding there's a higher chance that if I test profitability now, that I am at least break even or profitable, right? And that's pretty strong to be. So you need to kind of do a little bit of like internal understanding of like, are you at that kind of level yet, or which stage are you at, and then we can evaluate from there. But yeah, you have to kind of look within first.
I hear you.
Oh,
Yeah.
just a quick one on that. You said you trade 0.01. Would it not be better to trade 0.02 to simulate the risk management section of it?
So the risk management kind of
with
like
half
closures, half closures. Yeah, I mean, ideally, yes, but I wanted to completely strip away money from it, right? Like trading a 0.02 compared to 0.01, there's still some psychological barrier in between, whereas like I can still go one denomination lower and just completely remove the fact that like I know like the difference between them is like you're making like 10 pips is like what $1 or something, right? Compared to $2. Like it's basically fine, but I think when you're working on the skill, I think closing half at certain points is not actually a big part of the skill. I'd say closing half is just a risk management that you like a method of risk management that you can use once you are potentially like you opening trades with like 0.5s or like one lots, and then you're understanding that this is an advantage point that you can tap. Whereas like if you're just learning the skills, once it taps that advantage point, you need to make a decision: either you stop break even or you're closing full, or both, right? And I think that's the main thing to learn. Like closing half is not like an actual thing to learn, I would say. It's just how you're managing risk. Does that kind of make sense? Obviously, everybody will have different opinions.
Yeah, I mean, it kind of makes sense. I'm just not sure actually.
I think it depends on people's personality as well.
I don't know. I just kind of see it sort of the risk management aspect is part of the skill.
Yeah, for sure.
If you're not doing it, if you're just trading 0.01 and then could get it big funded, then without the risk management and the drawdown levels, you'd be caught out.
Yeah. I mean, I think I think it depends slightly on the way you trade. Like if you do trade with closures, like 50% closures quite often, then yeah, I'd probably look to incorporate some of that into the overall learning section. Like opening like a 0.02 is probably a good idea to do that, to simulate that. But I think you make a good point for sure. As long as it's a smaller account. Yeah. Who was that?
I'm always curious, how to if I would start completely new my analysis. Like,
Can you speak a little bit louder, Izzy? I can't really hear you.
Can you hear me? Hello.
Yeah, now it's slightly better.
Yes. My question is when Don starts his stream.
Yeah.
He always like switches his targets. You know what I mean?
His switches is what?
Targets.
Oh, his targets.
Levels.
Yeah.
Yeah. And then you always like when we see this, and then I'm like, if you had a blank chart, how would you start with the monthly, weekly, daily, and then those week entries and those levels?
Yeah. Okay. So.
You know what I mean?
Yeah. So we change our levels very often, but that's mainly because every time price does something, like wherever it moves, like a 10 pips, 20 pips, or whatever, it's in a different range. And when it's in a different range, we need to understand what happened in that range in the past, which is why we then look in like the past. For example, let's say we were in this range here, right? Then this data is less useful to us, right? So we need to draw levels within 2009 to 1992. So what was the last time price was in this kind of level? These areas, right? So I'm going to be looking in this area to see, what is it respecting potentially? What are the ranges it's going to fill? What is it going to break below? If it wants to break above 2009, where does it need to grab liquidity? Maybe these sorts of areas, right? So that's why we look for, that's why the analysis changes very, very often. And generally, I would say your analysis will change every 4 hours, if not every 1 hour. So every so often, like when you get like a big push. For example, if you get a push above 1992, you get a buy and you hit 2009 or you hit like 2000, right? I would automatically redo my analysis because I'm not in this range anymore. All these lines that are relating to price when it was here don't make sense when I'm in this range. Does that make sense?
Yeah, but how do you determine like the ranges on the 1 hour or 30-minute and 15-minute? You know.
Yeah. Okay. So.
Different.
Yeah, so for example, right, let's say you're on the daily, right? The daily we close respecting here, and then now we're closing respecting. Let me just get rid of this. So you have two lines, right, on the daily. You're in a range on the daily, right here.
Yeah.
So last time you were in this range on the daily, you were here. So cool. I mark up this as my box. Drop down to the 4 hour, right? Where am I currently on the 4 hour? I'm here. So the range is slightly smaller now. I'm in a range between here and a range between here. So this is my 4 hour range, right? So let's go to this box. When was the last time I was in this 4 hour range? All right, let's say these areas. All right, so cool. Now that I'm here, right, now go to your 1 hour. What is the 1 hour range that I'm in? Right, 1 hour, potentially you have a range below this, right? If there's a level around these sorts of areas. Cool, then I'm in a range below this. Like, you could probably say this is a 30 actually, like a 30 range between here and somewhere like around these sorts of areas, I would say. Maybe like somewhere like this. Well, yeah, something like that, right? And then you would say, okay, cool, I'm currently in this range. Maybe this is slightly higher, right? But wherever this is, currently I'm in this range between 1985 and 1980. So cool, what happened in that box when I was in that range, right? So then now my box gets shrunk again to looking at these. I'm gonna move it to like to this, right? So what did the last time? So we're understanding that we tapped 1971 here, right? We've tapped. So this is likely the most likely thing that's gonna happen, which is it's just gonna push up because it's grab liquidity, right? What were the other times that it kind of did? You know, what happened to price a couple other times, right? So you tapped into these areas, not quite. Like this one tapped in 1970, 71 as well. Cool. What happened in this range? You know, you broke above, you filled the range, right? Did you break out of the range here? No. You grabbed liquidity again towards 76 before you were able to break up. Did you break up? No, right? And then you need to grab liquidity towards 1974, and then you broke up, right? So then at that point, maybe you can put a line towards here. I'm looking for buys now, here. Just like an example, right? Buys here or buys breakout above these sorts of areas, right? 1986. And then now I go to current price. I go to current price and I'm saying, okay, what does that look like? If price gets a breakout above here, 1985, 1986, cool. I can look for a buy because then I can target this, right?
Do you have like the confirmation it tapped 1974? You know?
Yeah. So I would say previously, right? We tapped 1971, but then we tapped 1971, right? Previously, and we didn't. So let's actually do this for you. This one, let's go to the 30 minute. This area, right? So let's mark up our lines again. So we have this. Let's say you have another line towards here, right? This range in general, right? So previously you also have this, so we're currently in this range, 85 to 80. When you got a closure above, right, you tapped into 74, right? But previous to that, prior to that, you also tapped into 1971, 1970 sorts of areas, right? So these sorts of areas. Because you tapped into there, did you get a closure above? No. So am I expecting closure above? I don't know, but likely not, right? If you do get a closure above, cool. I'm still looking for liquidity because the last time you were here, you grabbed liquidity before you went up, right? Either that or it's going to follow this. But I'm understanding that the last time there's two scenarios that happened. Either you pushed up very aggressively above, and then you got a breakout and you just started going up, or you ranged a little bit more and you started going up, but you faked out to come back down, grab liquidity, go up. So these are two scenarios. I'm looking at which one.
You think the strong push up will be highly lower tap, like 1972 or 70?
I don't know, and I'm not going to predict where it is. I only predicted this here, which is exactly that level. I knew this was going to tap, right? But now that it's tapped, it can do anything. It can go up to here, or it can just do this range, and then if it goes up, it needs to tap more liquidity. That's it.
But would you go for a second? You know, if you bought there on the 1974 and you see the price closes above 85, would you go for a second entry?
Not necessarily. I mean, if I'm in a buy at 1974 and then I'm ready at 1985, I probably wouldn't have held. I'd probably closed full towards 1979.
Yeah, I know that, but I mean, like, would you go for a second trade? You know?
Maybe, because it's another confirmation that, you know, you're closing above, you're looking to drive up. So yeah, I probably would. In terms of, like, you know, if I did get into this trade and then I was looking at this trade, yeah, I'd probably take this as well. Yeah, but does that make a little bit more sense in terms of how I do that?
Yeah. Wow. So like pure price action.
It's
Wow.
pure price action. Like, it is, you can't get more pure price action than this. Yeah. Sup, Jacob, you alright?
Yeah, bro. I wanted to ask. So I think it would be for 3 p.m. your time. When that candle closed, the 3 p.m. Is that correct?
Which candle?
On the 1 hour. Check the 1 hour.
Let me go back
the
to
1 hour.
3 p.m. on the 1 hour chart. So that is here. So this bearish candle, this one.
When you close back in that range, could you have took not an instant, but when the next 1 hour opened, could you have took a buy right there? Because you were anticipating that you would fill the bottom of that range since you closed back in.
Fill the bottom of this range. So taking a buy here or sell?
Sell.
I would say, like, after this closed below here, I would be slightly worried that it's closing respecting this. So these and these, and you also kind of filled up to this area. So if you were looking for any positions, I'd be looking for, you know, maybe a top wick and a flip, and then you'd be really aggressive with these if you wanted to take this, because it's not the highest probability trade because you've already filled the range, right? If you haven't filled the range and your bearish candle was like kind of closing below with, like, you know, a little bit of top, a little bit of a bottom wick, but you were slightly higher, then maybe I could have looked for that. But because you kind of closed, like, all of this is quite messy, so I didn't really want to trade this anyways. But does that make sense? Yeah, I feel like once
I
it
think I
came,
just seen it more like it seemed like it just would have just drove to fill the range, but it makes sense that it had already filled it, so it doesn't make sense.
I'm just trying to find out where I took the trade, because I took a, I think I posted it on the members chat.
You would have got in earlier then, because you said, I heard what you said. You would have got in. I think you got in before the hourly close, right?
Yeah,
on
so
the 15 on the closure below range.
let's have a look. Where did I get in? I got in like multiple times. I tried looking for sells early, and then I got hit out at break even, but then it drove, and then I got into another position which was towards 1982. So like these sorts of areas. So let's break that down, right? 1982. Yeah, I think it was a closure on the 15 below, right? And I was understanding that this then, right, you're not going to break the highs and then break the lows, right? That's basically what I've seen constantly. So once you break this, there's a higher chance, like, because this had a no bottom wick as well. If you wanted to start driving up from here, this is probably enough liquidity to start driving up to retest these areas, right? Especially after grabbing liquidity here. If you wanted to drive up, you would have. But then you got a 15 closure below this, right? Below all of this as well, slightly below this. So I'm expecting this 15 to close and tap into 1980 at least. So that's where I went break even, this wick fill. And then after that, I just let it run. and then I closed full at 75. Yeah.
Gotcha.
Can I ask you something, Elvis?
Yeah, of course.
Is it normal that it's like when Don is trading that is always in big drawdown?
But he's only in big drawdown because his lot size is big. If you look at the actual like pips, it's not actually not like. Look, it's like it's about 100 pips, right? But your stop loss is 160, so you're pretty chill. And like you, as long as you know what you're risking, like for example, if I'm risking $100, right, then it's fine. I know I'm good. Like the max risk for this is $100, but I could have made $50 as well. Like that's what you're risking. That's why you're in the markets, right? For him, right, his willing risk is probably like 10, 20K, right? But for us, maybe it's like $20 or whatever. So we just take different lot sizes, but the drawdown is basically the same. I think it's not very common that he gets into like deep drawdown, but like a lot of the times the trades that, like for example this trade here, I think when it broke above and then we just took this one up to 2007, this was like no drawdown in this trade, right? And then it started coming down, we had a perfect closure. This one, if it started coming down, cool, then we probably, like if this flipped, you probably would have only had drawdown up to this amount and then it would have filled down. If it flipped, it would have filled. But it didn't flip, so now you're in a bit of drawdown. But until it closes above 87, the trade is still valid. Until it breaks these highs, the trade is still valid.
Until this.
Like
you don't think I always trade? I always like watch the 5-minute or 15-minute, and if I see like the price starting to break candle highs, I always have a little worried.
Oh yeah, for sure. You'll be worried, but at the same time, like that's a 5 and 15 candle, right? When you then look at the daily candle, the 4-hour candle, when they move, then your 5 will just be messy. Like when the hourly is like driving down or whatever, you might get some 5 candles which are bearish and then bullish and then bearish and then bullish, but your hour is going to drive down, and if it does, there's going to be one candle coming down potentially on like the 15. And it's going to be very strong. And then it's not going to make sense on the 5 anymore. Or for example, it's not going to make sense on the 1 anymore. But yeah.
My last question is stop loss placing.
Yeah.
How I always put it above the certain range or candle high, or above the range 2.
Yeah.
Is that good enough, or I need to make a more?
So you just need to think about what makes the most sense. So for example, in this trade, right? If price broke above this area, right? Like let's look on the hourly, right? If price broke above and back into 1983 to 1985, does your trade still make sense? Can it still come down? Yes, right? Because you haven't broken these highs. Because your market structure is at that point down, you grab liquidity, you made a lower low. So you, at this point still, you haven't broken these highs. So at any given point, you can even touch up to here and then start coming down. Which is why the stop loss is here, because once it breaks, there's a high chance that this move is then liquidity somewhere here for us to start driving up. Does that make sense? Yeah. So the stop loss just needs to be where the trade doesn't make sense anymore. Yeah, no worries. Cool guys, so some pretty strong questions today. You guys are asking better questions compared to when you first joined, which is always a very positive thing. But yeah, I'll probably end it here. We had all-time high viewers, I think, like 46, 47. Pretty nuts. Let me have a look. 50, Jesus Christ. That's 500,000 people. Man, that's crazy. But yeah, thanks for joining up, guys. And obviously, as usual, if you want to join the Zooms, right? I'm looking to pair these boys up. If you think they can be your potential friends in the future, join up, and then I'll pair you guys up so you can start trading together. But in terms of Don's trade, I think it's still valid at the moment. Like your 4-hour, is still bearish, right? You haven't broken these highs, and it doesn't really have a bottom wick. So once it does flip, you also close respecting this range. Once you flip, you're coming down. You're not even only respecting this candle higher, you're respecting the bottom of this candle. Like if this was a fake out and then this was your range, you're respecting that range. So any given point you can come down to fill the range. So it's still valid at the moment. But yeah, cool. I will see you guys tomorrow for the last day of the week. So be sure to join up. But yeah, cheers for stopping by, guys. And if you're trading Asian, good luck. Yeah. See you guys tomorrow.
Thank you.
No worries, guys.
Thanks, Elvis.
No worries. Cool. Yeah. For the guys on the YouTube, yeah, like as usual, right? Thanks for joining up. We had all-time high viewers today, which is fantastic. Don's trade currently, don't worry too much about it. If you are in some drawdown, just leave it, right? This is something to practice as well. Like, don't have any emotions during drawdown. It's just a number, right? If you just view it as a number, obviously there is some emotion that's attached to it, but don't let that emotion affect your trade. It can affect you, right? Because it's money, but don't let it affect your decision making in the trade. Because the last thing you want to do is close out full here, and then it comes back to TP, right? And then you just lost an opportunity to not only like not lose money, but actually make money, right? So be logical about how you're trading and all the setups and all the analysis. But yeah, thanks for dropping by, guys, and I will speak to you guys tomorrow on the streams. I think there's a Nightbot link for anybody who wants to join the membership and the Zooms. As usual, just hit me up anywhere, EvolutionDVS Instagram or through Discord if that's easier, and I can give you more information on that. Yeah, cool. I will see you guys tomorrow. Thank you very much. Peace.